Good afternoon, traders and investors. Will back here with another one. Another green day in the markets here, guys, as markets dipped initially on the day, but recovered beautifully into the end of the day. Most of our major sectors here in the green for the day, but IWM Russell pulling back 1.5% here, guys. So that was our major loser on the day. But for the most part, markets looking fairly healthy as our rotation does continue. And there is one major thing that is going to need to happen if we expect to see a pullback, and that is if our major tech bulls go into their daily consolidation, something that hasn't happened for a lot of names such as Apple and Microsoft, just to name a few. We'll get into that later here, but for the start of the video here, we are going to cover two earnings that came out today. We're going to be covering Walmart and AliBaba, one of my favorite companies that I believe is still undervalued at this point here, guys, right? So we're going to take a look at those two earnings, going to cover our major indexes as well. And lastly, as usual, our major tech names. We will be doing the portfolio recap tomorrow, Friday, after the close to see how we did on the week. So hope you guys had a great day. Without further ado, let's get right into it. SPY up 0.12%, QQQ etching out a little bit of a gain, 0.09% to the upside. And if we take a look at the heat map here, you can see that the market was fairly mixed, another mixed day on the market, but healthy rotation does continue here. Healthcare and financials holding up their own. And you can see big tech here still continuing to churn gains to the upside here, with the exception of Tesla down almost 4% off of some comments of Elon Musk on a podcast. Unfortunately, once again, Elon Musk dragging down the company with political statements that he probably shouldn't be making as the CEO of a publicly listed company here. So we'll get into that later. And also Amazon ever so slightly down 0.26% here. So let's get into the earnings right away here, guys, right? So first off, we're going to tackle Walmart. Walmart with one of its worst days that I've seen in a while, guys, down over 8% on the day, but they are bouncing off a nice technical level here. So as you can see, this level right here, the 155 level, has been pretty much a very big area of support. 155, 154. This whole range right here is a very decent area of support, and Walmart obviously ricocheting off of our 200-day moving average ever so slightly here as well. So what exactly happened on the earnings call to make them drop 8%, guys? Well, they delivered somewhat bad guidance in terms of being worried about the consumer's discretionary spending, a pattern that has been coming up here over the last month or two. Now, if we get into the earnings, they did beat, however, guys. They beat on EPS and they did beat on revenue here. Walmart, very, very solid company, household names, as everybody knows. They generate so many sales on an annual basis, guys. Look at their revenue for just last year alone, $611 billion, absolutely massive revenue. And for this year as well, it's going to be fairly good. It probably should come in over the $700 billion mark as well. So they just continue to increase revenue all the time, guys. And if you look at the forecast as well, you can see that on an annual basis over the next couple of years, they are going to continue growing EPS. This is a company that has no problem growing EPS and free cash flow over time. So a little bit of an anomaly here in terms of a sell-off, but they did have a similar sell-off here last earnings here, top to bottom here of almost 4%. So it's been a few rough quarterly earnings reports here for Walmart, but at a decent support level. So let's get into the call right away here, guys. Walmart shares slide as retailer gives a cautious outlook about consumer spending. So despite the double beat on EPS, beat on revenue, they gave some very, very cautious outlook here in terms of which items the consumer was tapering back on here. So Walmart on Thursday topped Wall Street fiscal third quarter earnings as sales rose, but the big box retailer struck a cautious tone with its outlook after it saw consumer spending weaken at the end of the period. They actually gave some insight into October spending here. But what I want to bring your attention to is right here. Inflation has also waned, and for some categories, deflation has taken hold. Very, very good. A trend that could help Walmart's shoppers, but hurt the company's sales. So good for the economy, but slightly bad for Walmart's sales and profitability. Walmart obviously makes most of their money on discretionary items. They don't mark up food a ton, and those are prices that have been coming down. Prices of some grocery items remain higher, but they have fallen for dairy, eggs, chicken, and seafood. These are all big purchase items for Walmart consumers here, right? And he added that relief is coming for customers as they look for holiday gifts. Most of consumers have only been shopping for sales. This is what they've said pretty much so far here, right? So our events have been strong. We've been pleased with those. Halloween was good overall, but the last couple of weeks of October, there were certainly some trends in the business that made us pause and kind of rethink the health of the consumer here, right? So that is what happened for Walmart here. You can see that the same store sales are also down 4.9% on a quarter over quarter basis. Let me move my head over here, right? You can see that this was one of the weakest quarters that Walmart has had pretty much all throughout the year, right? So very, very negative year decline here on same store sales in the quarter. in the current quarter, and also for fiscal year outlook for 2024, they do say that same-store sales may have a slight fall here as consumers continue to taper back on their spending of discretionary items here. So not a very good guidance by Walmart here. They did beat, and I do believe in Walmart's business model. Obviously, they've been a company that's been around for a very long time, and what they have is good news here is Walmart is also making money in newer ways, such as selling ads and annual memberships to Walmart Plus. They're trying to replicate Costco's business model, its answer to Amazon Prime. Revenue for its ad business, Walmart Connect, jumped 26% for the prior year period. So they have been diversifying over the last 2 years. If you don't know, this Walmart Connect is pretty new here. It's only about 2 to 3 years old, and they've been really ramping up their advertising business, as Walmart does have very good insights into consumers, obviously because they are one of the largest retailers in the world here. So all in all, guys, a fairly decent report from Walmart in terms of their current financials. Their future financials will look pretty good in terms of EPS here, but you may have a slight taper back in terms of revenue and in terms of net profit margin. So we will see if that's going to hurt the company long term. I still do think the company is positioned very well. And now we've just gotten a very nice discount after Walmart hit all-time high just yesterday, right? So down pretty much 8% back to our long-term support zone. And if you can see here, guys, Walmart has been able to get through thick and thin time and time and time again here, and their chart looks absolutely beautiful on the long-term time frame. So even if we do pull back here into the 150s, 140s, it could be a decent opportunity for a pickup for any long-term portfolio specifically here. So that is pretty much it for your Walmart earnings here. Now we're going to get into AliBaba, which is a bit more of a company to dissect here, a bit more complex company to dissect. So what exactly happened here? They dropped 9.14% after earnings this morning. And you'll see, however, they did have a double beat. So similar to Walmart, they did have a double beat, but it was in two things that happened with the company, guys. Two things that not many people would have been able to predict at all. So this is kind of a bit of a miniature black swan for the company here. Not that big of a deal in the long-term standing for the company, but still they did dip around 10% here, now trading around $79. Double beat on EPS, beat on revenue here. And before we get into the call, guys, I just want to remind you that Alibaba is trading at a very decent PE ratio, right? They're only trading at about a PE ratio of 19. The company's growth prospects are absolutely amazing. You can see they have no problem increasing annual revenue here, although it did dip with obviously the Chinese slowdown because of end of pandemic restrictions and whatnot. So there has been a slowdown here in 2022. But they have been picking it back up in 2023. Very decent quarters as a whole, guys. This company is bringing in over $30 billion a quarter and very strong free cash flow position as well. Take a look at the analyst targets. Every single analyst in the book, except for two, and there's a lot of people covering this, most of them have strong buys on the stock. Very, very decent price targets to the upside. If you take a look at the annual EPS for the next 4 years here, guys, you can see that they will be ramping up EPS. They have a very decent free cash flow as well. They have tons of cash on hand. Let me show you that, guys, real quick. Just to show you that Alibaba, despite their most recent sell-off, and they're very decently off all-time highs, their financial position is amazing. Cash and cash equivalents sitting very, very healthy here. Not a lot of long-term debt here. They've done a very, very good job of managing their cash efficiently, and we'll get into that in the report. They're actually going to use their cash for something that they haven't done in a while here. So Alibaba still down over 75%, and this is one of my favorite growth plays here, guys, for the next 3 to 4 years. I do think the company remains undervalued here. So if we take a look at our if we take a look at the report here, Alibaba shares slide 9% after it shelves the cloud spinoff, citing U.S. chip restrictions. So that's factor number one. Factor number one is the fact that they were supposed to spin off this line of their business. And keep in mind, this line of business brings in about 10% of Alibaba's revenue. So it is a fairly decent line of business with fairly decent profit margins. Now, they were supposed to spin it off from the company, meaning they were supposed to remove this business segment from the company and list it as its own publicly traded company, something that companies do all the time, the spin-offs, right? But now they have kind of shelved the idea of that. So they're not going to follow through with it anymore. And we'll see why, right? So we'll get into it right away here. We believe that a full spin-off of Cloud Intelligence Group may not achieve the intended effect of shareholder value enhancement. It's actually a bit more than that. This is kind of a what they're trying to do in retaliation, most likely, to U.S. sanctions on technology exports to China here. So we will see here, right? So U.S. listed shares of Chinese e-commerce giant Alibaba slid Thursday after it announced it would not proceed with a full spin-off of its cloud group due to U.S. chip export restrictions here. So here's the problem here, guys, is that the Alibaba group said U.S. chip export restrictions have made it harder for Chinese firms to get critical chip supplies from U.S. companies. They're talking about semiconductors. The U.S. barred sales of NVIDIA's advanced artificial intelligence-focused H800 and A800 chips in October here, and that is most likely the reason why they have refused to do the spin-off of their cloud business. It's a little bit of retaliation here. They want to continue to protect on their own Chinese technology potentially. So on Thursday, Alibaba said the restrictions have created uncertainties for the prospects of Cloud Intelligence Group here. So a little bit of a kickback here. And factor number two, the reason why the stock dropped, another factor that was not expected here. Ahead of the earnings announcement Thursday, Alibaba announced in a regulatory filing that the family trust of founder Jack Ma was planning to sell down its stake in the business, selling 10 million shares for $870 million here in cash. So this is also something that hurt the stock negatively. So those two factors, the refusal to spin off their cloud business and Jack Ma selling a bunch of shares here, did hurt the stock in the short term here. However, they did announce very decent earnings, guys. Their financials, as I've shown you, are very solid. Their growth prospects are very solid, and they're trading at a very deep discount, in my opinion, in relation to some of their competitors here. You will take a look at some of their numbers here. Their numbers are fantastic, guys. The revenue, year-over-year growth, is up 9%. Their income from operations, year-over-year, is up 34% here. Their EPS is up 21% year-over-year, guys. These double-digit growth here numbers are very, very, very good for a company like Alibaba. I absolutely love this. And look at their free cash flow here, guys. Their free cash flow right now is around $6.2 billion here. That's absolutely amazing here. Absolutely amazing indeed. So they have no problem. They have no problem here in terms of cash, and we'll get into that as well. So free cash flow increase here of 27%. Absolutely amazing. And now what is going to happen here? You can see they are finally going to pay a one-time dividend. Alibaba has never paid a dividend in their company history, and we were about to get the first one for about $1 a share if you're a shareholder of record as of December 11th or 12th, if I do remember here. We'll get back to the article. And they have repurchased a bunch of shares with that cash. They've repurchased $1.7 billion in shares over the last quarter here. Very, very, very good. That should total their share repurchases for the year to just over $5 billion. So it's been absolutely amazing in repurchasing its own shares here. Very, very, very good development indeed here. Right. The aggregate demand of the dividend will be roughly $2.5 billion, and they'll pay out the sum. Sorry, it was on December 21st here. Very, very, very good. It's going to be $1 per American depository share. So anybody who trades Alibaba under this ticker on the American market will get to $1 per share here on December 21st. If you're a shareholder of record, they should be paying it out in January here. So fairly decent here. Look at this. We ended the quarter with $63 billion in cash, and we generated 27 billion in free cash flow in the last 12 months. Absolutely massive, guys. This is what you want to see from a growth company like Alibaba, trading at a very decent discount in a very nice technical area of support here as well, in the lower 70 and the lower $80, high 70 range. Very, very good area to be picking up the company. So I did write a position on the company before earnings yesterday, and if we get assigned, I am at $82 for one contract, 100 shares. So looking forward to see how that plays out. So that's pretty much everything for our earnings today. Now let's get right into our major indexes here. Excuse me, just had to get some coffee. So SPY, we can see here, guys, that SPY has been trending absolutely beautiful, right? Clear daily uptrend, and the weekly bulls are also in control. That's what we've been saying on the channel. Weekly downtrend has been reversed by the bulls. Now, what are we going to wait for, guys, is we need to see potential daily consolidation. So as soon as this daily consolidation finishes, right now it's looking like a pretty nice bull flag here. But if we do consolidate further here, target this area right here, guys, 446 down to 441, the area of the gap fill right here. Would not surprise me if we have to come down into that area if this move is already topped out. But if the bulls just trend sideways here and give us another leg up, that would be very, very good. We would be encountering resistance at that point at 454. So going to be keeping a close eye here, guys. No red flags for the moment. Why? Because our lower time frames, guys, this 4-hour 12 EMA, this yellow line right here, is just not done. You see how well the bulls have held this entire time of this rally, and until we lose the 12 EMA on the 4-hour, I don't think we're going anywhere. And we also haven't set a meaningfully hourly downtrend either yet. So keep an eye on those two things, guys. Need to set a meaningful hourly downtrend if you want to see further daily consolidation, and you will need to see a loss of the 4-hour trend, of the 4-hour 12 EMA as well, if you want to see more meaningful daily consolidation. But as of now, no red flags whatsoever. We are just going to keep our eyes peeled on the bulls when they come into this 454 area of resistance here. And I'll remind you, once this daily move tops out and we start setting a daily downtrend eventually here, that will just be for weekly consolidation and the bulls with tons of space for weekly consolidation for a potential second leg up on the weekly as well. So very, very healthy on SPY. Now QQQ, exact same concept, guys. QQQ, we're going to be looking out once again for major tech here. Need to see major tech pull back if you want to see significant daily consolidation here on QQQ, but as of now, looking very, very healthy. It's coming, guys. The consolidation is inevitable, but there's no red flags of it yet. We're waiting for it and maybe just around the corner, but there's no reason that the bulls can't put in another leg higher here before they do potentially hit daily consolidation. So we will be looking at the previous 52-week high, which is pretty much this area right here, 388. So keep your eyes peeled on 388. We're almost there. We almost got there yesterday pretty much, but still not cracking it here. And beyond that, guys, we're pretty much looking to your all-time high areas of resistance here. We're talking about all the way up to the 400 level here. So bulls making a very, very decent move, a very decent stab at the 52-week high. So once again, if we do pull back directly from here, target this area right here, this green box, 381 all the way to 374. That's most likely the area that we will consolidate into if we break down from here, guys. Anything above 370 is just looking for a daily higher low for further uptrend continuation at that point, guys. Bulls looking very, very healthy. And if we do get some eventual daily consolidation, let's say this move tops up right over here, and then we get daily downtrend, well, we're just going to be looking out for our weekly higher lows as well before a second move to the weekly to the upside here. So bulls in full control of every time frame. XLF financials, beautiful day on financials, guys, up 0.4%. And now we've really recaptured. We're back up to some of these weekly levels here, guys. 35 is a key level. That's why it's coming in as pretty much resistance in this area. But bulls really doing a great job here. Daily uptrend is set. So any pullback at this point, if we can't get above this resistance in one shot, we're just going to be looking for the daily higher low above 33.51 for potential move higher into it. Now on the weekly is looking very, very good. So 1, 2, 3 legs down, and now we've engulfed these past 2 weekly legs down in one single shot to the upside. So as soon as we start pulling back on the weekly, let's say the bulls top out here and we set potentially a nice little daily downtrend, potentially a nice little daily weekly bear flag as well, we're just going to be looking for a weekly higher low for a second week leg up here, and then we are going to be heading into the 36, 37 area of resistance, area that's been pretty much resistance here ever since June of 2022. So a long time standing resistance area, going to be looking for financials to break through that potentially in the next 1 to 2 months. So we'll see if they can do it. But as of now, no red flags. Love to see the rotation. XLV as well. XLV doing well, but still not breaking above, guys. Still not breaking above our 129 level. Need to see a break of our 129. If not, we are just going to be plagued. If the rest of the markets do start pulling back here, expect XLV to go into somewhat of a tightening range. And the only other thing that the bulls can do here is giving me a break of 129. 129 would confirm the daily uptrend. XLV is the only sector that has not confirmed the daily uptrend yet, so we are still waiting for that. But if we do have some sideways consolidation here, guys, that's not too big of a deal here. The weekly is looking fairly good as well. Have some nice little accumulation in this area here, so we are going to be looking for the eventual break above here, reset the weekly trend to the bulls here. We're in a nice area of accumulation here, so I do think the bulls are strong down here. It's just they haven't really manifested their rally, so we need the break of 129, right? Or on a consolidation move right here, I need them to hold this level right here, 124.69. So keep an eye on that. Either we're going to get the daily trend change right away, or we're going to go into somewhat of a consolidation range. And there's some very good support down here, so just keep an eye on that. IWM Russell pulling back here 1.62%, but they do have room to give back here, guys. Nice little beautiful daily uptrend here. So if we do continue to pull back further, just looking for a daily higher low, anything above 167 is just for a daily higher low for further trend change increase here, or further continuation on the trend rather, right? So something like this pretty much. 174.53, keep an eye on this level. That's your first stop pretty much. It's your previous resistance, which is now going to be support. And if it's any lower than that, keep an eye on your moving averages down here in the 173, 172 pocket. Russell looking very good, guys, even on the weekly here. Nice weekly move up here. So any consolidation potentially in the next few weeks is just going to be for a weekly higher low to potentially reset to a weekly uptrend to the bulls here, encountering a bunch of moving averages on the weekly. So normal that the bulls are encountering such resistance here after such a massive move here, guys, on Tuesday, right? This was the 5.5% day. So it's normal that the bulls are pulling back ever so slightly, cooling down these lower time frames that got overbought almost immediately after Tuesday's move here. So everything's still looking healthy on the Russell, guys. No red flags whatsoever, just looking for daily trend continuation. And lastly, the Dow Jones here, guys. Dow Jones also looking fairly good here, consolidating sideways sideways, down only 0.13%. Dow Jones, any pullback is going to be for the daily higher low. Anything above 33,800 is going to be for that daily higher low. For daily trend continuation here, I am expecting the Dow Jones and most of our indexes to put in potentially one more leg before potentially setting up for a daily downtrend. Daily downtrend would just mean that we are in for some weekly consolidation here, and that would be very welcome here because the bulls have put in such a big move, 1, 2, 3 legs down, engulfing move to the upside, engulfing the past 2 weekly legs down here, so they have tons of space to set the weekly higher low and potentially rise in the future here. So if we do come back here, guys, target at 34,000, this green box right here, 34,300 down to 34,000 flat. That could be a likely area of pullback zone if the Dow Jones can't get higher than this. They can't get higher than that right away. But if we do just consolidate here sideways, go for a third leg up, and you're obviously targeting our previous 52-week highs of 35,700. So going to be keeping a very close eye on those two levels. If you pull back right away, target this range right here. But if we just consolidate sideways, use this kind of area here as support and then lift off for leg number 3. Well, we're targeting 35,700, and that is probably going to be the last area here before we maybe consolidate for a little bit of weekly pullback before a next move up, because the bulls would be pretty tired at that point. You can see almost overbought here. All right, so that's pretty much it for our major indexes here. Now let's get into big tech. So big tech, Apple, again, Apple's just ridiculous, guys, at this point, right? Almost up 1% on the day as well. Continuing to push, now up close to the $190 range. That's exactly what we wanted to see. That was the previous area of resistance. Excuse me, getting over a bit of a cold here. So this was the previous area of resistance here. So if Apple is getting tired here, guys, it's absolutely normal. We are a bit overbought here, but we need to lose these 4-hour time frames, guys. Like I was saying on SPY and QQQ, if you don't lose the 4-hour EMA, your bulls are just simply not done yet. And the bears have not set an hourly downtrend this entire time. Hourly downtrend would be something like this. No hourly downtrend has been set by the bears as of yet of this entire rally. So we are just going to keep churning higher until the bears prove it to us. As of now, bulls still no red flags in sight. The red flags would be a 4-hour loss of the EMA or your first start at an hourly downtrend. And that's going to be the same thing for most of big tech. So until Apple and Microsoft and a few others, such as Google, start pulling back here, guys, Meta as well. Unless we start seeing some pullback, the indexes are going to have a very hard time pulling back on their own. So still waiting for the Apple pullback. No red flags whatsoever yet. Apple is just going to keep going. The next area of resistance is your previous pretty much all-time highs all the way up here, 196, 197, guys. We'll see if we can get there in one clean shot, or if the bulls need to just set a daily higher low real quick and then move to the upside here. Any move down, obviously on the weekly as well, is just going to be for a weekly higher low for further move to the upside here. So Apple looking very, very healthy. No red flags whatsoever, not yet. Now let's move down to AMD. AMD, very nice day here of recovery after yesterday's red day. So 1.5% to the upside as well. AMD refusing to pull back more than one day. Look, sometimes we get one day of red and then just right back up to green. So once again, this is exactly what happened. And same thing, guys, right? You'll see the bears have not been able to capture the 4-hour, the 12 EMA here, this yellow line right here, haven't been able to capture it and set a 4-hour downtrend, right? Even on this move down, they were not able to set the hourly downtrend. Not able to set the hourly downtrend here, just kind of hovering. And the bulls really ran with it this morning here. So no hourly downtrends in sight since the move pretty much off the lows here. So until we start seeing a loss of the 4-hour 12 EMA and hourly downtrends here, your bulls are not done. So look out for those two things in terms of red flags for the indexes and a lot of big tech. AMD not pulling back just yet. I'll remind you, your next area of resistance is pretty much right here, right? So we're right in it right now, the 121, 122, and then it's to our previous 52-week highs here, around the 130s here. So still a decent amount of space, but bulls struggling with our area of resistance currently. We'll see if they can continue to break that. If they don't, just looking for a potential daily pullback here into the 113, 112 perhaps, and that will be good for a weekly consolidation, weekly higher low into another move up. Everything is looking very healthy on a lot of big tech. Now let's move down to Amazon. Amazon consolidating here today, down 0.26%. They were actually down significantly more than that here. They were actually down over 2.5% for the day and recovering nicely intraday here, guys. So same thing, right? So the bulls almost lost the 12 EMA here. You can see they lost it almost once in the past last Thursday, and they kind of lost it here today, but quickly recovering a lot during the day here. And the bears actually set the hourly downtrend here. And now we have the bulls already trying to reverse that. So we'll see what happens tomorrow on Amazon, but Amazon performing very, very well, just encountering a bit of 52-week high resistance in the higher 145 level, right? But Amazon set up beautifully, tagging off of our 12 EMA and our previous level of support right here. So bulls able to defend that very, very nicely here on Amazon. We will see if they're cut out for more potential consolidation here. Any more consolidation on the daily, we are just going to be looking for potentially into next week, some weekly consolidation here. Weekly consolidation, the bulls with so much space to set a weekly higher low for a further move up here. So if the markets do pull back, which eventually they're going to, all the indexes and big tech is eventually going to have to set the weekly higher lows, right? It can be sideways. They can do something like this and then continue to rise. But eventually we will have to take a slight little breather here for potentially 1 or 2 weeks. And we will see if Amazon is going to pull back as well here. If Amazon does pull back anymore, I'm looking for about the mid 135s to be writing some options on it. But everything so far, so good for Amazon. Now let's move down to Google. Google performing very, very well as well today, guys. Almost up 2%, 1.7% to the upside here. So nice, beautiful daily uptrend here now in its second leg. So any pullback at this point is going to be for a higher low. Anything above 130.79 is going to be for that trend, that higher low here for the resumption of the daily trend to the upside here. And now Google already back to 52-week high area of resistance, right? 140 to 142 is going to be that pocket. It's acted as resistance in the past, so I do expect it to act as resistance a bit in the future. Might have something happen like this to where they need to slightly reset. Google also, the weekly move has just been completely engulfed at this point, guys. After earnings, it's now been 3 weeks of green in a row at this point, right? So looking very, very healthy overall. And Google as well is one that has not lost the 12 EMA here on the 4-hour time frame, right? So they tried to lose it once last Friday pretty much, couldn't get it done, and now the bulls have just maintained this 12 EMA on the 4-hour chart. And also on the 1-hour chart, bears unable to set the hourly downtrend here. Even down here, couldn't set the hourly downtrend, right? Attempt at it, no, bulls just engulfed right again. So no hourly downtrends in sight. So as long as you don't see on the indexes and big tech the loss of the 12 EMA on the 4-hour and the hourly downtrends here, we are not going to be in for significant daily consolidation. If we do pull back for some which reason from here tomorrow, right, I would be targeting an area like this. 134, 133, 132 is going to be the area that I may be writing some options in, because Google bulls control every single time frame at this point, and any pullback is just going to be for a dip buy for a future weekly increase here and weekly trend change. Very good by Google. Now moving on to Meta. Meta up again here today, 0.44% after dropping a bit on the morning here, but recovering very, very nicely here. So a bit of a daily bull flag, guys. Daily bull flags all over the place at this point here, guys. So we are just sitting on our previous level here, guys. So look at this previous level, right? Resistance area. Now the 325 is playing as support. So bulls using that area very, very nicely as support. So we were just looking for a daily higher low, and the bulls are in the process of setting it right now here, guys. So reacting beautifully from this area of support. You had your 12 EMA here as well, so no surprise that Meta bulls chose to react from there. Meta looking very, very healthy even on the weekly as well. Very, very clean weekly uptrend at this point here, guys. Any pullback on the weekly, like I said, for the rest of everything is just going to be for a weekly higher low for further trend continuation of the upside. No red flags on Meta whatsoever. Bulls in full control, and you can see once again tried to lose the 12 EMA on the 4-hour time frame, but couldn't get it done. The bears just can't flush. So we'll see what happens tomorrow. But as of now, no 4-hour loss of the 12 EMA. And they did set an hourly downtrend on the day today, but engulfing pretty much. So from Wednesday into today, they had the hourly downtrend, but now bulls have reversed. So until the hourly downtrend lasts more than pretty much not even a full trading day altogether, right? We are not going to get some significant consolidation in a lot of these names. So keep an eye out for that on Meta. Microsoft, same principle as well. Microsoft, new all-time highs. Once again, 1.76% to the upside here. Microsoft is an absolute monster at this point, right? So many days in a row, but eventually all good things come to an end. Microsoft is getting overbought on the daily here, and on the weekly here, you can see we are also entering overbought conditions. So any pullback on the daily eventually is just going to be for a daily higher low. Keep an eye here, guys. Your previous all-time highs around the 360 range. That's where your 12 EMA is as well. Have a little bit of an area of support right here. So just keep an eye on that if we do choose to consolidate from here. Any pullback is just looking for a daily higher low for further trend continuation of the upside. And also on the weekly, eventually the weekly is going to pull back as well. So we'll just be looking for weekly consolidation. You can see Microsoft goes up hard, can consolidate sideways before moving higher again, sideways moves a bit and then higher again, right? So I'm not expecting big consolidation from Microsoft, but some consolidation is going to happen, and that's going to happen with the daily trend here. Same thing, 4-hour, 12 EMA, just impregnable. The bears just cannot get it done here. 12 EMA on the 4-hour here, guys, sorry, is just in full control of the bulls, so no red flags there, and no hourly downtrend here as well, right? Tried for it. Bulls again with the recapture here. Tried for it here. Bulls again with the recapture here. Tried for it here. Nope. Engulfing move to the upside. So no loss of the hourly trend. Need an hourly downtrend and need to lose the 12 EMA on the 4-hour chart if you want to see some more meaningful daily downtrends. Losing those two time frames, guys, the 4 and the 1 hour, the reason I've been bringing them up so much is because that will most likely be extended daily consolidation, maybe even daily downtrends. That will be your weekly consolidation on a lot of these things here. Now let's move down to NVIDIA. NVIDIA, very good performance by NVIDIA, up 1.21% here. So NVIDIA as well kind of consolidating sideways before potentially a move higher, but earnings next Tuesday. So can't comment too much on the price action, guys. Earnings is also obviously going to change everything. It's going to be one way or the other. To the upside here, guys, we're obviously looking at our previous all-time highs. 502 is going to be the area to watch. It got a little bit higher than that earnings cycle after hours. I think it hit 512, 513. So that will be the area to watch here for your all-time highs after earnings. And to the downside, guys, I would not like to see NVIDIA really break below 437. This 437 area is key. Obviously, 400 is a lot more important, but this is really your most significant area where I can see bulls come back down to off of a bad earnings report or just less than expected good report, right? And that would be a drop of pretty much 10%, 11%. NVIDIA is pretty volatile, so we'll see what happens next Tuesday. But as of now, bulls in full control here. And once again, no surprise, 12 EMA, 4-hour chart, absolutely impregnable by the bears. They just can't get through it. And at this point, hourly downtrend attempt here was rejected by the bulls today here, right? So no hourly downtrend. You can see they set it up for barely a day before getting engulfed here. So they can't control the lower time frames. The bulls are still entirely in control. And on the weekly, looking very good here, guys. Any pullback on the weekly, just looking for a weekly lower high for further continuation. Now, Tesla here pulling back. Tesla. Now, this stock was doing great, but unfortunately, Elon Musk, I think he was on a podcast or a conference with members of Salesforce, so stock ticker CRM, and he unfortunately said he was commenting on the geopolitical events that are going around in the Middle East right now. I'm not going to say them on the channel, but he had some choice words in terms of some political statements, some political stances that he chose to view, and he should not be making. And even as a Tesla shareholder, I love the stock, guys, but sometimes Elon Musk can be the blessing and the curse of the company, guys. He's an absolute genius. He's very, very hardworking. Everybody knows this, but his mouth does a lot of the bad work sometimes. You saw that last earnings call as well, where Elon Musk was very, very negative in terms of tonality. Even though he was talking about positive things, he was very, very negative in terms of his tone on the call. And once again here today, Tesla getting hit. Unfortunately here, 4% after some remarks came through that Elon Musk had said here. Not really any news specific to Tesla here, more in relation to the founder. But Tesla, we were always looking for the daily higher low, right? So any pullback is for a daily higher low. Target this area right here. All of your moving averages. We're bouncing off this green line right here that you can barely see. Well, that's the 200-day moving average. You have your lower time frame. You have your lower moving averages right here as well, the 12 and the 26. So keep an eye on this pocket right here. 225 is the likely zone where we could potentially do a little bit of a touch and then go into further upside. So nice little daily uptrend by Tesla. And I'll remind you, as long as we're in a daily uptrend, we are still looking to recapture more of this weekly move here. So bulls looking very, very healthy. They do have a little bit of space here, but I need them to really take some support zone here into the 225 area. If we dip into this area here for another day or two, I may write more puts here below 220 all the way to 210, looking very, very juicy as an opportunity to write some options here on Tesla. But so far, the bulls are doing fairly good. Can't say anything too bad about them. Now, lastly, Palantir and PayPal. Palantir doing fairly well as well, guys, here today. You can see Palantir very beautiful sideways consolidation at the top here. So nice little push up, consolidation sideways, and now another move up, and now consolidation sideways. So Palantir not willing to give up too many of these gains whatsoever. They're toying with the 52-week high, guys, and the 52-week high is really crucial, is the continuation of the daily uptrend. It's also the continuation here of a potential of the weekly uptrend, but most importantly, it would be a new monthly uptrend by Palantir. So 2020, you need to see a close above 20.2 right here. That's going to be your new 52-week high pretty much. It's going to be a very good job by Palantir shareholders for pushing it up like that. Congratulations to everybody who's participated in the gains in Palantir so far. It's been a great year. No red flags by the bulls whatsoever. They're pulling back beautifully into this area of support here. $19 range is where it could dip to if we continue to consolidate slightly sideways here. And once again, the 12 EMA, you can see here, guys, when we lose the 12 EMA, the bulls ride it to the downside on the 4-hour, right? Well, here's the thing, right? So this was this area right here, but ever since we started rallying, right, the bears have not been able to capture this 12 EMA in a significant fashion without the bulls immediately recapturing it right away. So now we currently have a bit of a loss of it, but you can see today towards the close, they recaptured it again and not able to set the hourly downtrend significantly as well. We have a bit of a sell-off right here, and then bulls recapturing right into the end of the day. So we will see if the bulls can once again change the hourly trend to the upside. But ever since this rally, look, the past consolidation zone, not able to set the hourly downtrend. Here we set it ever so slightly here, but once again recaptured immediately by the bulls, and you can see back and forth sideways, not giving up the 4-hour 12 EMA either, right? So Palantir looking very, very, very healthy, no red flags whatsoever. Any pullback, guys, is going to be for a weekly higher low. At that point, just target the lower 18s. And now lastly, PayPal pulling back significantly here today, guys. Didn't like to see that at all. 2.45%, only one day after breaking pretty much this area of resistance that we had at 56.60. We are right back into it here. So I need PayPal to start clearing a bit more space here for the bulls here, guys. So it's been a nice daily uptrend so far, but I wanted this move to continue into the $60 range before potentially pulling back. But we got the pullback right away here today, guys, as a lot of things did pull back on the market here today. So crucial level for PayPal here, 53.75. The bulls need to hold this at all costs. If we do pull back further, I'm looking for these moving averages to provide a bit of support. 55.50 is going to be the area to watch in terms of that as your last area that I want them to hold. Need to see them hold the moving averages. You have not had the 12 EMA cross above this 26 line. You've not had the yellow line cross above the orange line here for a very long time, guys, ever since this most recent uptrend here, pretty much June through July, right? So need to maintain this daily uptrend going, and only then will we be able to recapture more of this weekly move to the downside here. I'd like to see the weekly move before topping out, come up at least into the 64, 65 area and do something like this, set us up nicely for a weekly trend change like this, guys. So PayPal, unfortunately, with a 2.5% of the downside, still some room for the bulls to play defense here, but I really need them to hold the 53.75. I would not like to see them break below this area, however. So PayPal looking decent, still in my buying zone, guys. Still a very, very cheap valuation for a very good company. Now, that's pretty much it that I had for you guys today. So if you did like the video, consider dropping a like, helps me out for the algorithm. And if you're new to the channel, consider subscribing. We make these videos pretty much every day of the week after the close here, recapping earnings, technicals, and all the fundamentals as well here. And if you have any questions, feel free to comment down below here, guys. Any macro options, stocks, whichever you like, I got you. I will get back to you in the next 24 hours, guys. So I hope you guys had a beautiful week trading. Tomorrow we'll be doing the weekly recap here as usual, and take a look into my portfolio as well. So take care, guys. I'll see you tomorrow after the close, and peace.